Hey everyone. Uh, okay. All right. Hopefully you can hear me now. YouTube has been a little bit difficult today from where I am for some reason, but let's see what's going on. It's definitely interesting. So I've got you running on two computers here. Okay. Good. So I got the stream running from my laptop, but I'm reading the chat in the on my other computer screen. So if I'm not looking directly at you, it's because I'm looking at the screen over here. So anyway, hope you guys are having a good week and that you banged the pots and pans for the NHS today. I know it's Thursday. Martin always tells me about that. So let me know where you're coming in from. If you haven't been on the stream before, welcome. This is generally a finance stream about peer-to-peer lending, crowd lending, and anything investment related that if I have any knowledge about, I'm happy to answer your questions. If you need some dating advice too, I could probably help you out with that as well. So hi Richard from Southampton. I sent the right link in the email this week. Yeah, good. Finally, I seem to just have problems. Sometimes I just send the wrong links out, but I seem to have gotten it right this week. So, hi Martin. If my weekly conference is the highlight of your week, well, I'm very honored to think that that would be the highlight of your week. So thank you for that. Hi, Maith Carolee from Brighton, sort of my neck of the woods on the south coast. Chica Boy, hi from Folkestone. All right, David, where am I? I'm here, David. Still in sunny Florida. You can see the sun coming through. I'm looking forward to getting back to the UK at some point, but when that's going to happen, I have to move this horrible plastic bag out of the way. So you've been doing dusting and cleaning. Hi, Annabelle. Hi, Susie. I know you, Susie. Yes, I'm back. Hi, Hillary, Paul. Good. I'm glad you can hear me. Okay, so if you have any questions about peer-to-peer lending, crowd lending, companies that you're investing through, fears, something you're excited about, any company maybe that you're looking at investing through, you want an opinion on, I will definitely happy to do that. All I ask and request is that you give me that thumbs up on the like button if you can, helps me out, and subscribe to the Financial Thing channel so you can be informed when I put new videos up. If you want to be informed, you can hit that little bell button and that will tell you in your feed. So let's see here. Somebody from Milton Keynes buffering. Hopefully I'm not buffering now, but if I am, sorry about that. And I realize the laptop camera is not as good as the one from last week. So next week I will definitely have that fixed. So we got Warwickshire. Good, Sam. DJ Sam. Are you a DJ, Sam? Or was that just your initials? So, Arthur, I'm just going to go through a couple of questions and see what you're asking. Arthur says, is any additional security offered to money invested in peer-to-peer ISAs? No, everything in the ISA, Arthur, pretty much runs identically as it would in a standard peer-to-peer lending account, so you don't get any additional security. The only security is FSCS protection on money that you have in a holding account, like through a brokerage account. So you don't get any additional protection just because it's through an ISA. Richard, RateSetter seems to be doing well, returning investors' funds, £5 million each week. It gives me increasing confidence in them. However, where are they funding this from with little inward liquidity? That's a really good question. RateSetter, well, I put in my own personal sell order as a test on March the 13th, and so far I've had nothing come into my account. So I thought a month would be what would be looking at if you were looking to try to exit out of your RateSetter investment, but it seems my personal experience has been longer. So that liquidity is just coming from borrower payments and the provision funds, which if you're invested through RateSetter, every investor is covered the same way through one large provision fund. And every time a borrower makes a payment, which is happening daily, I mean, they get thousands and thousands of transactions every day. So that buffers the provision fund. So any liquidity is also coming from that fund. That's where RateSetter's liquidity comes from. Because they're getting so many payments on a daily basis, that fund does tend to be pretty liquid. I think one of the issues they're having right now is just the amount of transactions that they're having to process with limited staff. They've got a lot of staff working remotely. So when you only have a limited staff, processing transactions, you can only do so much a day. I'm not sure how automated that process is. And then when you're trying to exit out, there has to be a buyer. So even though you have a provision fund, so I think I just explained that completely wrong. Let me re-explain that to you. The provision fund is financed from the money that is coming in from payments. The liquidity to exit comes from people who are willing to buy the loans from you as a seller. So the reason personally that I haven't been able to exit out, I'm presuming because there isn't any buyers or because of the amount of transactions that are being pushed through. So if you've had an experience and you have been able to exit out, just tell me in the chat, because I would love to know how your experience is with the exit. But it is based on supply and demand. You will not be able to exit even if the provision fund has money in it, because that provision fund is not guaranteed to be an exit liquidity fund at all. So I hope I explained that right to you. I'm a little bit flustered today. I had to go out. Those little Barclays pin century calculators? Well, my battery died and I needed to do some banking transactions. So I had to run out here and try to find somewhere that had these special type of batteries, because of course Barclays uses some strange batteries in the back of these things. So I'm a little bit flustered because I came back a little bit late. So hi, let's see who else is in the stream here. We got Switzerland. Hi from Switzerland. What a beautiful place to be. Quarantine. Whitby. Hi from Whitby and Ian and Whitby. Hi ES in Portugal. Anil. Hi Anil. How's it going? Robert from Hornchurch in Essex and Crete, Greece. So Robert, do you have 1 foot in Crete and 1 foot in Hornchurch? I don't know how that works, but that sounds fun. Okay, hi Smith said Asset Capital paid my money back from my holding account. Good news on that. Yep, they haven't frozen any withdrawals from a holding account. Some of the other peer-to-peer companies have, particularly Growth Street, who we will talk about. Growth Street. Move this mic a little bit there. Let's see. I've given a thumbs up. Thanks to the thumbs up. I appreciate that. DJ, Sam, any update on Cufflink? No, Cufflink has been really quiet. I do have a very good relationship with them, so if anything changes, they do tend to let me know. But I think they're, again, just sort of biding their time, waiting to see how things are playing out with COVID. And they said they've had a lot of loan requests, and I think a lot of peer-to-peer companies are getting these borrower requests, many borrower requests, but they're not moving forward with those until things have gotten settled. Also, what happens is, in order for a peer-to-peer company to lend to borrowers, they have to have investor money coming in. And due to the uncertainty with the COVID, there isn't as much influx of investor funds to be able to lend the borrowers. So these peer-to-peer companies are being careful because they don't want to lend out money that they don't have, or they don't want to take loan commitments for loans that they don't have a way to fund. So I think you're going to see that in the short term, probably not long term. Derek, hi Derek from Connecticut. Good old USA. Paul. So Martin, Funding Circle promised 3 to 4% returns each month, even right now, but mine has dried up completely. So has RateSetter over the past 3 days. Not a penny. Yeah, I'll definitely be talking about Funding Circle. Some of the things that they're going through right now. There really isn't any, seems like, continuity to these payments. Sometimes they dry up and sometimes they don't. Consistency, especially in this financial climate, you're just not going to see that consistency that you might have seen before. And Funding Circle has been problematic anyways, even before COVID. I don't know why RateSetter you would have seen a drop in your payments, but yeah. Annabelle, Cufflink started compounding interest yesterday. I've opted in, but do you recommend we do? So yeah, I think anytime you can take advantage of compound interest, it's going to increase your return. So I'll be opting into that myself. So, but that's me personally. You have to do whatever is right for you. B, is it not better to invest now in shares? Well, depends what type of shares you're looking to get into. If you read my website, financialthing.com, you'll know that I'm a big thumbs up guy when it comes to index trackers, and picking individual shares, I think, is really a tough thing to do. Even trying to time the market is very difficult. It really depends what you're going to buy. I don't think you'd be in a bad position if you started to invest in index trackers right now. But I do have a hunch, and this was purely just a hunch. Nobody knows what's going to happen in the stock market. I think we have not seen the bottom of the stock market. If you think about it, I think I read a earnings report for one of the big major companies that reported a negative 17% earnings, and the stock price dropped 1%. Now, in normal conditions, if somebody reported a negative 17% earnings, that stock would really usually get hammered, and you're just not seeing that kind of normal market reaction. What you're seeing now is trading companies like in the US, Charles Schwab, Robinhood have seen this massive uptick in trading accounts being opened in the last couple of weeks. I think 600,000 plus accounts for one company in the last week. Amateur investors are opening up stock accounts, and they're trying to invest in equities. And the usual rule of thumb is when the amateurs are buying, that's the time you should be selling. I think seasoned investors have been the ones that have been selling and sort of sitting on the sidelines waiting. When the amateur investors are buying a lot, usually this is a time when you want to be very cautious. And I don't think it would be a bad thing to be cautious when it comes to stocks. Just right now, we don't know, where the COVID is really going. It's slowing down for sure, but whether this economic impact lasts for another 3 months or 6 months or a year is going to be what really drives the stock market. Now, I've been sitting on some cash looking to invest in index trackers for, I would say, a year. And even when the market hit, the Dow was at 18,000, I bought some, but I just had a little bit of a feeling that you just haven't seen the bottom of this market. I might be wrong about that. Maybe these amateur investors will just keep pumping money into the equities market and it will just keep rising. But I have a feeling that you're going to see another negative downturn. So what you could do is DCA, which dollar cost averaging, or PCA, pound cost averaging, which is invest over a period of time. If you had, say, 50,000 pounds that you wanted to invest into stocks or index trackers, just go, $5,000 a month for the next 10 months. And that way you would even out the highs and the lows. Because trying to time the market and find the highs and the lows is just a loser's game. It's very, very difficult. You have to have a lot of luck. to even make that happen. So, but I'm very bullish long term in the stock market. I think that shares will rebound. I mean, they already have. You're back Dow, what, 24,000. FTSE has recovered somewhat, but it's not that far off from when the Dow was at 29,000 and its highs, which, considering what's happened economically, is crazy to think that the markets have not been affected more. So that's why I'm sort of sitting on the sideline. Anyway, Martin, so hopefully I answered your question about the inconsistency. Ersby, yes. Anil, what do you think about rate setters' performance? I just think it's too early to tell right now. I think, none of these companies are really going to know until July, after the forbearance of the 3 months kicks in, to whether these people that have been given a payment holiday will be able to pay after 3 months. LendingWorks is one of the companies that addressed that this week. So until later in the summer, I just don't think that the performance of any company is going to be very accurate. Let's see, John, East Query, new plant over your left shoulder. Easy query. That plant is actually very fake. I have managed to kill every living plant that I've ever tried to take care of, so I figured fake ones are for me. I'm just not a very good horticulturalist. So yes, James, I'll go through assets. I do have a little bit of news, not too much. Dale, do I know if all LoanPad securities are in residential? Well, Dale, you can look at some of the loan documents inside LoanPad's information, but the majority of, I believe, that's a good question. I don't think they have any commercial. They don't, because all of the loans are smaller amounts, so they stick to residential. And I have spoken to and visited the offices of the Hanf, who is LoanPad's lending partner, and they do residential. Philip, okay, now Lawrence, thinking of putting some funds into Unbolted. Opinions, please, and if I should auto invest. Philip, I think just for convenience, auto invest is pretty good. That's what I have done. Unbolted has been good. They're a very small operation. That was one of the things that I was sort of a little bit hesitant at the beginning, because I see this correlation of small companies, and I wonder, there's a small company that hasn't been operating for a long time, a good place to invest your money. So I wanted to sort of give it some time and see how they've been doing. But so far, so good with Unbolted. They've had a couple of issues. They've had a court situation with one of their lenders, but they seem to have handled everything fine, and I continue to get interest payments from them without any problems. So I do like the auto invest. Auto invest allows you to opt into certain categories of lending with them. They lend on this thing called the Gold Trust, and then they have another type of lending which is more non-conventional, things like artwork or things. I tend to stay away from that because they're hard to liquidate. But I'd stick to the Gold Trust mainly, and tend to auto invest just through that, because gold's a really easy thing to liquidate, or jewelry, diamonds, watches. I definitely learned a lesson from not investing anything that is strange, like artwork or rare books. Funding Secure used to do that, and most of those loans end up in default at some point. So, and then very difficult to liquidate. So I would say auto invest is good if you choose carefully what you're auto investing in. Let's stick to gold and jewelry. Peer-to-peer saying they want £85,000 investors covered like banks in the event of platform failure. Your thoughts? Not going to happen. That's my thoughts. I put peer-to-peer, you're investing, right? It's like stocks and shares companies like Charles Stanley are not going to cover your loan portfolio of stocks and shares. So I think that the holding accounts are covered under the FSCS protection of 85,000, and I don't see that investors would be covered at anything outside the holding account. I mean, the government's just not going to cover that. Richard Weber says, some from the 5-year put up for sale on the 16th, sold a couple of days ago, seems to be selling different markets at different speeds. So I'm presuming, Richard, you talk about rate setter and you've been able to sell from the 5-year market. Yeah, if there's a buyer, I'm sure you'd be able to sell. I'm trying to sell out of the access account. They do work differently. And when you say the 16th, I'm wondering, do you mean April 16th or March? I'm presuming April. But that's good news. If you can sell, that's good. New email from Assets Today confirming lender fee details of 0.9%. Yeah, I haven't. See, let's read it, because I haven't read that email. I should have done. Because it came out when I was going to get the batteries for the Pen Century. So the lender fee is 0.9% per annum for at least the next 3 months. So again, what I thought is happening, it's supposed to be a temporary fee. 0.075% per month. How does the fee work? Starting on May 1st. Will be calculated throughout the month based on your funds under management, but deducted as a reduction of the actual interest that you receive. So they'll be pulling it out, I would imagine, as you get. Let's see, the fees applied to your funds under management. So I would imagine it will be calculated every time you get a payment. If I'm guessing, here is how they're doing it. Nope. So they're going to pay, so it'll be a monthly fee. So you're going to be paying about 0.075% per month. Yeah, I mean, look, fees are obviously not ideal, right? But if it prevents a company from going into financial distress, take the fee. I mean, administration has been a big pain in the ass for the funding secure lending collateral companies that have all gone out of business, and you just want to prevent that. So if they have to take an extra fee, and it is going to be, I'm sure it's going to be temporary, so take the fee. I don't care, that's fine. These fees will reduce the interest paid. Is it tax deductible? Yeah, it's going to reduce your interest that you paid. So no big surprise there. I figured they would take it. I actually thought they would deduct it every time you were made a payment, but so you're taking it monthly. James says, I've managed to withdraw from rate set. That's good news. Yeah. I haven't. Maybe they don't like me for some reason. Let's see here. Yeah, if you have any questions, just pop them in the chat. I'm just reading through. Okay, James managed to withdraw from rate setter. Yeah, that's good. ES says, I missed the dip in the stock market. I was waiting for the next financial year to start. Stupid question, I know. Do you think there'll be another dip? That's like saying, is it going to rain? Yeah, eventually there'll be another dip. But I personally, yeah, I think there will be, but I have no way to know that. And I don't think anybody else does either. So, but it wouldn't be surprising to me if the Dow went sort of low 20,000s again, maybe 19,000. But nothing is surprising right now, right? Who would have ever thought that we'd be on the lockdown from a virus? So if the stock market kept going up and up and up again for another 3 years, 5 years, it wouldn't surprise me either. But I'm sitting in some cash now waiting to see if that happens. I think my plan of action personally is to wait until after the election in November and see what happens with Mr. Trump and see what the markets do, if nothing else. But I wouldn't be surprised if you saw another major dip. Paul Bagworth says, what peer-to-peer company do I feel most secure with? At the moment, LoanPad. I feel very secure with LoanPad. I'll kind of run through my analysis of the information that I have and the news that I have, and they're on there. Dale, will you be updating your top 5 soon? Yes, Dale. I will be next Monday. I will have, maybe Tuesday, I'll have the top 5 redone. Been slacking a little bit, but it's still the same as what it is for the most part. Octopus Choice is on there, but if you're a new investor, you can't invest through Octopus at the moment. So, but yeah, I think if I was looking at companies right now, I'll just give you a quick list. LoanPad, RateSetter, I think is okay. Crowd Property, I'd be looking at. Lend Invest, Blend Network, Cufflink, I still like them. I don't have a huge amount in Cufflink, but you know, I have a really good relationship with them, and I think Property Lending will be fine. So I think I covered most of the ones that I'd be looking at. Octopus Choice, Lend Invest, RateSetter, Crowd Property, Blend Network, and Cufflink, and also possibly PropLend. You know, I went to visit them last summer. I was in London and had a good experience with them. They seem to be on top of what they're doing, but we'll see about them. James says, I managed to withdraw 100% from RateSetter and LoanPad. 95% of my money is in assets, 6 figures, and I don't feel confident about them. Yeah, James, I mean, good lesson to learn, right? If you're saying 95% of your whole allocation of peer-to-peer lending with it was in assets capital, please diversify your money, you know, I mean, hopefully that's not the case, but you just never know with these companies. And small business lending, small SME lending it does have a level of risk to it. So hopefully, you know, I have good high hopes for assets capital. I think they'll be okay. Let's see here. And Neil, yes, had very bad experience with Lendy. Yes, me too. Everybody did, right? But if you, by the way, if you're an investor in Lendy, Google the Lendy Action Group, LAG, and join up. You can also find the information on my website on the Lendy page. Join that. It's a group that is representing investors legally against their horrendous waterfall clause that they had in their terms and conditions that allows Lendy to be paid a portion of the recovered funds of defaulted loans, which is really a crappy thing that they had in their terms and conditions, which I missed. Let's see, Robert, lucky to have a villa in Crete, very nice. And Robert says, I like Cufflink, I've used them a lot. Yeah. Yeah, Gary, I like Crowd Property. I think Michael Bristow really knows what he's doing. So I think, you know, when you have a team of very experienced people who know what they're doing, you're probably in good hands. No guarantees with any of this stuff, but yeah, I like them. I probably will be throwing some money at Crowd Property soon. Matthew Carolee says, which company do you invest in if you've never done it before? I'm on the other side of the fence at the moment, borrowing from RateSetter. So you're actually borrowing. That's interesting. We don't get too many people that are actually borrowers. So that would be funny if you lent money, Matthew, to RateSetter because you are borrowing money from them. But I would say if you never invest in peer-to-peer lending, any of the companies that I just mentioned before would be a good place to start. Just whatever you're investing, spread it around. You know, don't put too much money into any one company. LoanPad would be a great starting point. By the way, if you're going to sign up to any of these peer-to-peer lending companies, please go to my website and click on the cashback page, because there's a list of the offers that our peer-to-peer companies are offering to you, so you can get some cash back. LoanPad offers a cashback deal right now, and it also helps me out as an affiliate. So if any of this information is handy for you and you want to sign up through my account, through my website, that keeps me in business. Thank you. So yes, I would definitely look at LoanPad. You could go RateSetter. You could go LendInvest. You could put a bit into Cufflink and Octopus Choice. You know, Crowd Property. The thing about Crowd Property is they have quite a high deposit minimum. It's like £2,500, I think. So if you're looking to start with a lower amount, so you don't have so much into any one company, Crowd Property is challenging for a new investor. But if you're a high net worth individual and 2,500 is not a problem for you, then Crowd Property is one of the companies I would take a look at. So AC Chat's been waiting over 5 weeks from RateSet and nothing as of yet. Yeah, me too. Yeah, Sam. So the only reason that Cufflink kind of fell off my top 5 list was at the time when I wrote it, they were not doing anything operationally. So I was a little more hesitant. When I say operationally, I mean taking on new loans. And when companies stop taking on new loans, I become a little bit hesitant with recommending, because we just don't know how long this COVID is going to go on for. So I get a little bit more cautious. Now, if you look at Octopus Choice, they're on my top 5 list and they're not taking on any new loans too. Now, why would I say one is okay and one I'd be a little bit more hesitant? Well, Octopus Choice is backed by a massive corporate company of Octopus Investments, which is healthcare, energy. They manage a several billion-pound investment portfolio on top of that. So they have the funding to be able to float Octopus Choice through any difficult times. When you have a company that's more independent like Cufflink, then you don't have that financial backing that Octopus Choice has. Now, again, I think Cufflink is a fine place to put money. Don't get me wrong. My top 5 has really changed because of COVID, so it's a little bit different now to what it would be if things were operating normally in the economy. So I mean, I have my money in Cufflink. I haven't exited it out of there. I would say if my list was a top 6, they'd be number 6. So that helps you out at all. John Day, which peer-to-peers have implemented the most reasonable, fair coronavirus approach? I think any of the peer-to-peers that have given people forbearance of a payment holiday is really fair. Assets Capital, Lending Works. The other ones, as I understand, are doing as requested. So I like what Lending Works has done. Too, I'll chat about them a little bit more in depth later on in the stream. But yeah, I like what Lending Works has done. Assets Capital, I think, has been very fair. Anyone they want to help their borrowers out, right? And any company that really looks after their borrowers, I think, gets a thumbs up from me. Derek says, just quickly read an email from Assets regarding the new management fee. 75% of my loans are suspended. Do I still pay fees on those accounts? Let me get Derek. I'd have to read through that email again, because from what I understand, you will pay fees on everything. But how is the fee taken? So for investors in the access accounts, the fee will be taken from manual lending rate of the loan, and the amount left will be used to pay the target interest rate. So it is possible that access account lenders may see a reduction in their interest rate. So what that means is if you are in one of the access accounts that is a bucket of loans, some of those loans you could also invest in the manual lending account. So the interest rate will be taken will be used from that rather than. So if your access account is paying you say 5%, you have a loan in there that under manual lending is 7%. They're going to take the fee from the 7%. For manual lending account investors, any interest payments due to be paid to a lender whilst they have an outstanding fee balance from the first of each month will be used to pay the fee first. So they'll take it from the interest payments. I would say, so my answer to that question is the money, if the loan is suspended and they're not making any payments, then you won't receive a fee on that particular loan. So if you're in an access account, it'll be calculated as kind of like this bucket, all these different loans and the interest that's coming in. If the loan's suspended and they're not making payments, you won't have to pay a fee from that particular loan. So, sorry about the stream if you're having problems. Yeah, I don't know. better in the black than in the red. The stream keeps stopping. Hopefully you can still see me. Okay. Yeah, hopefully technically next week we'll be in a better position. I won't be on the laptop, but I was having some issues with the webcam that I have, so I had to hop on the laptop. Let's see what else. Richard said funding circles prices shot up since they got into government-backed loan scheme and essentially closed peer-to-peer. What does that say about that peer-to-peer business model? All right, let me talk about funding circle for a second. You know, again, everything on this stream is purely my opinion, but Funding Circle is a company that really concerns me. I mean, if you just look at their basic financials, they released their financials for 2019, and they had originally in 2018, they had a cash reserve of 133 million pounds. Sorry, 333 million pounds. And at the end of December 19th, it had fallen to 164 million pounds. Now, when a company is burning through cash that quickly, that's never a good sign. It's just not. Also, their operating costs have increased from 193 million in 2018 to 252 million pounds in 2019. So cash reserves have fallen by 50%. Operating costs have gone up by almost 25%. They got a huge payroll, 1,165 employees. Their payroll is almost 100 million pounds a year, and their marketing, they're spending 66 million. So Funding Circle is, I mean, just on paper, it doesn't look like they're doing very well financially. So it's a mega company, and they have very high expenses to keep up with. So I don't know. I wouldn't feel particularly comfortable about them in the long run. The share price is just horrible from where it was released at 440p and now, what, 89p today. Hopefully this CBILS loans that they're able to lend through the government now will help them out, help them to get some revenue, but it essentially cuts out their new peer-to-peer lending business, any new peer-to-peer, because investors can't invest in CBILS loans. So, you know, I just don't see them changing that model anytime soon. I mean, if they have this influx of CBILS loans, why would they want to risk lending to private businesses? I think you might see Funding Circle actually get rid of their retail investing temporarily, if not permanently. I mean, it would make sense financially for them to do that, but we'll see. Let's see. DJ Sam says, come on, people. I see 72 people watching, but only 31 likes. Thumbs up. Yeah, give me a thumbs up. I do this for the love and not for the money, just so you know. This is just my way of giving back to you, people, for reading my website for so long, and I appreciate it. So anything that I can help you with, happy to give you my opinions. Martin says, I believe that growing cannabis plants indoors usually fails. Your secret is safe with me. That's definitely not a cannabis plant. Never have. I never smoked this stuff. Too scared. I don't like feeling out of control. So. Brian says, have you been following the assets thread? Some members are getting very belligerent and threatening legal action over access to the Access account. Yes, yeah, I have. And you know what? I mean, that's silly, because in the terms and conditions of any of these peer-to-peer lending companies, it talks about normal market conditions and being able to access. And this is an unprecedented economical situation where nothing is normal now. So the peer-to-peer companies do have authorization to be able to stop access to an Access account. I mean, it says it in all of the terms and conditions that exit is not guaranteed. You know, some of the people on the forums can get a little bit agitated. I understand why. Oh, what should be on Propland? Propland, yeah, Robert, like I said, I went to visit them. Last time I was in London, I had a meeting with the owner and a couple of other people there, and I thought they were good. I like their business model. They loan out to income producing properties. So yeah, I wouldn't be opposed to throwing some money into Propland. A lot of the times you really do go off of the people that are running the companies too. They could have a great business model, right? But if the people running the companies are not competent, then it doesn't matter. And with Propland,